Back with another Analyzing Your Stock Picks video, although a couple of months late, so now let's quickly get into it. Company overview. Today we are looking at Lion Electric, the electric truck, bus and heavy duty company. Right out of the gate, this company already has a stacked product lineup. The Urban Class 6 and 8 for your short-range cargo needs. The Lion C, an electric school bus with 72 seats and 155 miles of range. Lion A, an electric mini school bus with 24 seats and 150 miles of range. And lastly, Lion M, the electric minibus for all your city needs. At a first glance, these products are quite interesting for any company operating in the short-range cargo or short-range public transport areas. As of right now, the company already has 450 vehicles out there in the world with a total combined 8 million miles driven on their platforms. As an investor, this tells me that the company is quite similar to a boutique for now. And that is fine because small companies can still be great companies. And don't you worry, we'll talk more just a bit later on in this video about the investment perspective you might have before you step into this company. And this is especially interesting, the company already has a factory in Montreal, out of which they can produce 2,500 vehicles per year already. They also have an additional factory in Mirabel, Canada for the production of Lion A and Lion M minibuses. And they are ramping up a US-based 20,000 vehicle per annum facility in Illinois. Noteworthy on this one, they expect the first vehicles out of this factory to hit the road in the second half of 2022 already. But of course, the product lineup we've just talked about doesn't stop there. These are all the buses we've just talked about, and these are all the buses planned to release before the end of 2022. Noteworthy, even more school bus alternatives, the first fully electric ambulance, electric utility buses, as well as a fully electric tractor for the really large cargo. Of course, this company also has an order book they like to boast. As of making this video, they have 2,000 orders for all electric medium and heavy duty urban vehicles, which have yet to be filled. And this is the juicy part. The company promises a TCO or total cost of ownership of 26%, 13% and 27% compared to normal diesel alternatives. This means that Lion Electric is promising vehicles which on the long run are significantly cheaper than any other vehicle type out there. And that is amazing. That is exactly what we want to see. Although, to be fair, these are the in-house projections the company made itself, so do take these numbers with a grain of salt. Now that we have an understanding of the company itself, let's talk about their plans for the future. If their management is to be believed, this company has big plans for the future. As we saw earlier, the company is quickly developing a 20,000 vehicle facility in Illinois with plans of producing the first vehicles before 2022. And the factory should be partly operational during the second half of 2022. And aside from Illinois, the company is quickly developing the Lion campus. Here they hope to develop a battery plant for the in-house battery production as well as their innovation center. Both of these facilities should be up and running before 2022 ends, and also good to note, the battery facility will have the capacity of 14,000 of Lion's electric trucks and buses per year. So that is the current plan, and I must say from an investment perspective, I really like to see all these growth plans. However, how successful the company is in executing their grand plans is yet to be seen, and it's also for you to decide. Now let's do a quick look through their financials. The first pit stop we're making is at the company's balance sheet. So these are all the numbers for Lion Electric on September 30, 2021. Do keep in mind these numbers are a snapshot, but they shouldn't have changed too much from then till today. Noteworthy, the company is sitting on a huge cash position, $317 million to be exact. Keep this number in mind. Also noteworthy, the book value of their property, plant and equipment is just $14 million. Although to be fair, I think this number will change greatly heading into 2022 when all Lion Electric's new facilities should be up and running. Also noteworthy, a huge chunk of this company's book value is in intangible assets. Examples of these kinds of assets are patented technologies, trademarks or brands. I would guess a huge chunk of these intangibles would be their technologies for the lithium-ion batteries and their electric vehicles. And remember the $317 million in cash? Well, the company only has $318 million in liabilities. This is quite amazing for any growth company for sure. Remember, it is really hard for a company to go bankrupt if the company has no debt. As a value investor, I like my companies to be lean on debt, and this company for sure is. Remember, at the current share price and with the current fully diluted shares outstanding, we are looking at a roughly $2 billion worth company. So at the current pace of $12 million in revenue per quarter or $50 million in revenue per year, this puts the company at a price to sales ratio of 40. Meaning for every $1 the company does in revenue, you pay $40 on the stock market. It doesn't sound too good from that angle. Also keep in mind the company is severely unprofitable as of right now. Yes, they did turn a profit in Q3 2021, but the most of that came from these warrants, as we can see here, so it isn't organic profitability at all. My opinions and thoughts. I quickly want to go back to Lion Electric's future growth plans. In this part of the video, I want to roughly calculate or guesstimate how much revenue this company should be able to do in the future. In the future, they should be able to produce 20,000 vehicles per annum from their facility in Illinois, as well as 2,500 vehicles per year from their facility in Canada. Let's give this company the benefit of the doubt and assume they'll be able to produce 25,000 vehicles in the year 2023. I personally think this is highly unlikely for 2023, but oh well. We will be using these two numbers. $35 million for the first 3 quarters of 2021, which came from 125 different vehicles sold. For these calculations, we will assume that all that revenue came from just those 125 vehicles, which isn't true, but this is just a guesstimation anyway. Anyways, if we divide this number by this number, we get to a total of $280,000 per vehicle sold. These $280,000 is just a guesstimation, and sadly there's no way for us to know if the sales number is true. But according to Google, we are pretty darn close to the average sales price of a normal diesel powered truck in the US, so that is fine by me. Now let's calculate the revenue in 2023. 25,000 vehicles times $280,000 per vehicle results in $7 billion in revenue per year. Just to put that number into perspective, you are paying $2 billion today for the whole company to get $7 billion in revenue just a couple of years from today. I think these numbers make sense. I think from a first glance this company could be an amazing investment opportunity. And as we speak, the company seems to hover around the area where I would find it attractive, but this is of course for you to decide. I am personally not invested in Lion Electric, nor do I expect to invest in the future. After all, school and city buses do not excite me, and I do not think my expertise is best used by researching heavy duty vehicles. But that doesn't mean you cannot research the company further. Now I want to give you guys some of the questions that I would personally research before I would decide to invest in this company. First, what is the main reason for the most recent prolonged downturn in the share price? Did the story significantly change, or is this just a classic post-SPAC bleed out? Second, the management, what are they like? Do you trust those people with your money? Third, plans for behind 2022. Do those plans exist? Can you get behind those plans? Fourth, does the company have a moat? Does it have a competitive advantage? If you don't know what a moat is, or maybe you just don't know how you can assess a moat, well, then certainly watch this video out of my Stock Research 101 series for beginners. The link will be in the top right corner. Also, thanks to Joseph for the recommendation. Without you, I would have never made this video. And also to you watching, if you have a company you would love for me to research, make sure to comment it down below and maybe your company will be featured here shortly. That said, I think that's about it. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.